Hello everyone, welcome to this video. This is about the Accounting 210. In this video, I will talk about the multiple choice of Chapter 9 for your exam 2. Before we go to the multiple choice, I want to quick review of Chapter 9 with you. We have been talking about that in the other video. But Chapter 9 talking about the master budget. Besides all the concepts, you have all these numbers of how do you get the budget. And then master budget has two parts: operating budgets that will give you budgeted income statement, and then financial budget that will give you the budgeted balance sheet. So we talk about everything there. We said you start with the sales budget, and then you kind of get a production budget. You have direct labor, direct material, and then manufacturing overhead. You have all these budgeted operating expenses, then you get your budgeted income statement. And then we also talk about how do we link everything together from operating budget to your financial budget. We said the financial budget, basically you have the cash collection and then cash payment. The main thing is, and then cash collection is based on the credit sales and then your cash sales. Remember, there is a my accounting lab assignment, a very good example about cash collection. Cash collection, if you sell at using cash, then you get the cash collection immediately. But if you sell at credit, part will be collected the same month, part will be collected next month, part will be never collected. Those are things you have to really know. And then we said cash payment is all about your capital expenditure and then all of your direct labor, direct material, and then the overhead, no matter it's manufacturing or operating. One thing I want to say one more time is we have to make an adjustment of depreciation and then bad debt. And then also you have the insurance, property taxes, those things, the other expense. We said every month you have the insurance expense, let's just say $100. But you don't pay it every month, you pay it half a year, or once a year. Then the cash will be cash payment for that month. You pay the whole month, whole year, like the 2019, January 1st, $1,200. And every month you allocate $100 of the insurance. But your cash is just the January, you cash paid $1,200. February, you have zero cash payment for that insurance, but you still have $100 insurance expense. So those are the things you have to adjust from the expense to our cash payment. Once you get that, you have your budgeted balance sheet. So that's the general idea. And then Chapter 9, all the multiple choice, we said, I'm not going to read too much, basically. Budgetary slack is you overstate your expense, you understate your revenue, and then we said benefits. There are three parts. I'm not going to really read. Master budget is the one for the entire organization, and then prepared first is always the sales budget. You talk about why, right? Because you need the sales budget to get your cash collection. You also need the sales budget to make production budget. And so we need to first have our sales budget first. Operating budget, we will get our budgeted operating income. So this is, make sure you know this, all the connection of the all the tables. Budgeting process, read textbook a little bit, but there is no performance report. There is no performance report, so it's not included in our budget. Part of the financial budget, we said the financial budget is all about the cash and then capital expenditure. So we said that you get your budgeted balance sheet, that is part of your financial. Operating expense, that is your operating budget. We said operating expense is a part of your operating budget, right? Sales budget, part of your budgeting income statement, part of your operating budget. Question 8 is the same as question 3. Entire organization is your master budget. Question 9 is similar with the question 4. First step is always do sales budget, and then question 10 is the same. Sales is the same as revenue. Sales revenue, income, profits, and earnings. Those 3, they are the same. Purpose of budgets, talk about that, is the same as question 2, 3 parts. And then next one said if you budgeted ending inventory is less than beginning inventory, what will happen? Always know the relation of those things. Your beginning plus your production or purchase equals to ending plus your sales. It tells you your ending is less than beginning. I'll just make a number. Ending is 3, beginning is 5. So ending is 3 less than 5. And then to make this equation hold, you have to have, I'll just put 3 as production and 5 as sales. So your production or purchase will be less than the sales. Sales will be more than production. Okay, next one, question 14. I'll talk about this one. It's a very good example, so put my steps there. So you want to have a budgeted sale of 23,000, and then you want ending inventory is 25% of next month. At the end of May, you have this on hand. So at the end of May, so your ending inventory of May will be beginning inventory of June. How many units you must produce in June so that you can get that. So we said to get our sales budget is to get our production budget, you budgeted to sell 23,000, so that's our budgeted sales, but we want to have 25% of next month's sale as our safety, you know, kind of. So we have to have 25% of next month's $25,000. So we need to total have 29,250. And then, as I said, your ending inventory of May is your beginning inventory of June. So that gives you 5,750. You needed to have that much, you already have that, so you produce 23,500 units. The other way to get this 5,000, if the question doesn't tell you, you also can get this number 5,750 by yourself, because we said beginning inventory is just the portion, the percentage of your this month sales. So your this month sales is 23,000, 25%. That will give you $5,750. 50 units. Sorry about that. It's all about units. So your next month sale units times the percentage will be your ending inventory. Your this month sales units times the percentage will be your beginning inventory. Make sure you know this type of question. Next one, talking about okay, let's see. Okay, cost of goods sold, right? So it's always beginning plus your purchase or production gives you ending plus cost of goods sold. Beginning said it's $120,000 and ending is 60%. That gives you 72,000, and then your purchase is 400,000. So your 120,000 plus 400,000 equals 72,000 plus your sales. So your sales has to be $448,000. Okay. Question 16. We had a kind of this talk about very quickly in class, but I want to explain one more time. So basically, this is about direct material. In order to get direct material, we have to first get the units to produce, right? So we first look at the long mover. So that is our units. You have to make sure your focus is your units or the material, okay, or the parts. So we are making about long mover first. We said your beginning is 100. So look at everything related with the long mover, related with our product. Beginning is 100, and then our ending is 150, and we want to sell 1,000. So we have to produce 1,050 units, 1,050 units. And then each unit, we will have 4 wheels, right? So totally we need 4,200 wheels or tires. And then we already said that we have 500 as a beginning inventory, and then our ending inventory is 310 of tires of the part as direct material. And then we already have 2, our production, you know, our production has to be, the part we need, how to say that? The part we need has to be 42,000. Then you have to purchase 4,100. This is a little bit awkward. Okay, this is a little bit awkward. So the better way to do it, okay, remember your remember your textbook. Okay, I can also show you, give me 1 second, kind of little bit bad on explaining this direct material. Okay, to get your direct material, it's always you start from the units of the product that you need to make, and then you time your different pounds, get the direct material you need, and then get your ending inventory. This is the direct material total needed, and minus beginning gives the purchase. So we said your units is 10,050 units, right? So 10,050 times 4 tires gives you 4,200 tires. So that 42 is the same as the pounds needed for production. And then our ending inventory, we want to have the ending inventory of 310. So that gives us 450.10. But we already have a beginning of 500. So that will also give you 40.10. So it's the same as 40.10 tires you need to purchase. Okay, make sure you got this one. Also, make sure you got this one, question 16. The next one, we talk about question 17. Said non-cash, right? Non-cash, we said is always depreciation expense and the bad debt. So those are the expense, depreciation expense, and then also bad debt expense. But you don't pay money for those expenses. They are non-cash. You need to make an adjustment when you transfer from your expense balance to your cash payment balance, which is investment in new long-term assets. That's your capital expenditure budget. And then question 19, talking about collection, right? Talking about collection. So you have cash collection budget. So that the budget sales are this, and then 50% are cash. So you will get the cash for sure. And then 30% in the month of sales of your credit sales, right? And then 60% of the credit sales will be collected next month, and 10% will be collected 2 months later. What's the anticipated cash collection for September, right? So what do you need? What do you need? Your September, okay, so you will have a collection. 30% of collection in September, 30% in the month of sales of your credit sales, right? September you totally sold 200, 100 is cash, 100 is credit, and 30% will be collected in September. But September you will also collect 60% of the credit sales in August, because your August sales, 60% will be collected in the following month. Your August sale will be collected the following month, it's September. And then your July, 30% of credit sale will be collected, sorry about that, 10% of your July credit sale will be collected 2 months later. So you sold your products using credit in July, 2 months later is your September, you will collect the 10% there. So your September has these 4 parts, okay? Your cash sales 100,000. And then 30% of credit sales of September, 60% of credit sales in August, and 10% of credit sales in July. So that total give you cash collection in September 190,000. Okay, this is also similar with your take-home assignment. I have illustrated everything there in the take-home assignment. Is the quality, my explanation is okay, but I mean the picture quality is not good because I use my phone. But you can still get some idea from that video. Okay. Question 20, talking about what will appear in both income statement and cash budget. We said depreciation expense will not be in cash budget. Equipment, this is your assets, it's not related with your income statement, right? So this will not be your income statement. Capital expenditures, those are about your cash, so it will not be in the income statement. Rent expense is part of your manufacturing overhead or your operating expense, and then you also need to pay the rent using cash, so that will be in your cash budget. Okay, next one, question 21, monthly cash collection different from sales. Why we have a different collection and then sales? Because we sell at a credit. We don't collect the money immediately. We have account receivable. I said why your expense is different from your cash payment, because we purchase a thing using also credit. We have account payable. I bought this pen, but I don't pay it immediately. I pay with a credit card, and the credit card will not charge me until next month. So you have a different timing, all about different timing. Non-cash, we talk about depreciation, and then also we said the bad debt expense, right? So make sure you know those two things. Question 23 said, if you want to get your cash payment budget, so you have to do what? You have to do all of this. Remember, you have to do purchase budget, so you can know, hey, how many you have to purchase, then you can make a cash payment. Operating expenditure, that's also the thing. You know, all of your CEO salary, you know, kind of those things. Sales expense you have to pay with the money, sales budget. So those are the things you have to get your cash payment budget. I'm not really sure. Sales budget, yeah, sales budget. You also need to sales budget. You always prepare ahead, right? But it really has nothing to do with your cash payment. It's related with your cash collection. Sorry about that. I'm not really sure about question 23. I know purchase budget and operating expense has to be prepared to get your cash payment. I'm not really sure about sales budget. Sorry about this one. You will not have this one in the exam. Sorry about this one. I'll double check, but I'm not going to put this one in the exam. It's my fault. Okay, and the next one said question 24, talking about still your cash collection, right? You have January, you have February. It's just told you this is credit sale immediately, so you don't have the cash sale that part. And then it said your February will collect 60% of February credit sales and 39% of January credit sales. Remember, we don't have a cash sales information, so it's all about credit sales collection. Therefore, you just will get $1,590 as your February cash collection. Okay, I think that's all I have for chapter 9. I said make sure you know, especially sales budget, production budget, those things, cash collection, cash payment, and then make sure what is non-cash item, and then all the relation of these budgets, just you know, how you will get all the numbers like question 14, 16, those things, and then all of the concepts in other multiple choice. We did the cash collection as your take-home assignment. Make sure you do check that one with your solution. And then we also practice the big problem overall. Make sure you check your solution, get the idea. And then if you have any question, just email me. I double check the multiple choice question 23 and then post the right answer to the Blackboard. Okay, thank you. Email me, always let me know if you have any question. I see you next time. Thank you.